A decade ago, the dollar had fallen to such a weak level against the euro that US newspapers began to report on how flush Europeans were flying across the Atlantic with the sole purpose of buying discounted iPods and handbags. In recent times, for stock market investors, these roles have been reversed, with US fund managers gazing towards Europe and being tempted by the bargains on offer compared to back home. European shares continue to trade at a meaningful discount to North American ones, with the stock 600 valued at a forward price to earnings multiple of 16 times compared to the US S&P 500 on 18.5. This valuation gap, combined with some strong economic data and easing concern about the stability of the single currency, is increasingly tempting all manner of North American investors to dip their toes back into European markets. As sentiment continues to improve, it is likely that one particular breed of US investor, the activist hedge fund, will start to be spotted more frequently on European shores. 8 years into the current bull market, US activists are finding it increasingly difficult to find soft targets on their own home turf. Europe, in comparison, remains relatively ripe with opportunity. Dan Loeb's tilt at Nestlé, which announced a 20 billion Swiss franc share buyback almost as soon as the hedge fund manager had announced he had bought its shares, could be a sign of some more to come. US companies have already enacted buybacks, which are the favored tools of many activist hedge funds, totaling over $2 trillion of their own equity in the last 5 years. So should investors in large European companies, which remain less levered than their US peers, be worried that renewed activist pressure will encourage management teams to walk down the same path? Buybacks, partly due to their association with activists, are often viewed as financial engineering that risk destroying long-term value. But like all things, there are good times to buy back shares and bad. A buyback is ultimately a capital allocation decision, and the crucial information is at what price a company decides to buy back its own equity rather than spend the cash on other things. If a company is buying back at an all-time high, like Nestlé is, then maybe shareholders in Europe should have cause for concern.